Okay, so Rachel Reeves, Labour's Chancellor, is facing some serious pressure over her budget plans, right? She's aiming to boost public services and stabilise the UK economy, but some experts are already sounding alarms, warning she might need an extra PS9 billion in tax hikes to avoid cuts to key public services. Yeah, that's not something people want to hear, especially with memories of austerity still fresh for a lot of folks. Reeves came in with a big vision, but it's sparking a lot of debate, both in the financial markets and among economic analysts. Now, let's get into it. On Thursday, when Reeves unveiled this budget, a budget that's actually Labour's first in 14 years, financial markets didn't respond too kindly. There were sharp increases in government borrowing costs, which, okay, in simple terms means it's getting more expensive for the government to borrow money. Traders and investors in the city weren't exactly thrilled with the tax and spending moves Reeves proposed. They're cautious, maybe a little jittery, because these decisions affect the wider economy and signal what might be coming next. And here's an interesting twist. Even though the International Monetary Fund (IMF) actually backed Labour's budget, saying it had promise, the market still didn't quite buy it. It seems like there's a disconnect between official endorsements and actual market reactions. The yield on those critical 10-year government bonds jumped, reaching the highest level this year, over 4.5%. That's significant because when yields rise, borrowing becomes pricier for the government. Higher yields might indicate a lack of confidence or increased perceived risk around the UK's economic stability. Right? So this might feel like déjà vu for some. Analysts have started drawing comparisons between this budget and Liz Truss's mini-budget back in 2022, which, caused a major upheaval in the markets. To be fair, most experts are saying this isn't a full-blown repeat of the Truss situation, but they're hinting that if investors get spooked enough, we could see some similar instability. So, okay, it's a delicate balance Reeves is trying to strike here. By Thursday night, both the Treasury and the Bank of England were on high alert, monitoring the fallout closely. Reeves herself went on Bloomberg, trying to reassure investors that Labour's top priority is stability, both economic and fiscal. She was adamant that they've put public finances on a solid trajectory, but the question remains, will that message stick? Because if market reactions continue like this, it could make it challenging for the Bank of England to implement the deep interest rate cuts they'd been eyeing. Now, another ripple effect here is that the pound fell against the dollar, hitting its lowest level in 2 months. So this adds to the financial pressures on Britain, especially as currency value impacts trade, inflation, and household purchasing power. Reeves's political opponent, Jeremy Hunt, seized this opportunity, claiming Labour's borrowing could lead to more expensive mortgages and higher debt interest payments for taxpayers. He's basically saying, if you're going to talk about stability, you better act on it too. And okay, this leads to the household level impact, right? If borrowing costs remain high, the Bank of England may feel the need to keep interest rates elevated for longer, which could then push up mortgage rates. A lot of regular folks are affected by this. Anyone with a mortgage or thinking of getting one could see higher payments as a result. Let's talk about the bigger picture. Reeves's budget outlines about PS70 billion in new spending measures, funded in part by a hefty round of tax hikes. But here's the kicker: some economists are skeptical about whether this budget can really reboot growth in a meaningful way. Paul Johnson from the Institute for Fiscal Studies (IFIS) praised Reeves for starting to fix what he sees as reckless spending by the previous government, but he warned that more will likely be needed. The IFS thinks Reeves might have to increase spending by an additional PS9 billion after next year to avoid cuts to critical departments like councils and the justice system. The IFS also called out the government's approach as pretending they can keep public spending steady in the short term, only to pull back in later years. It's like they're setting things up now to look generous, but there's a chance they won't follow through with all the funding as time goes on. Johnson put it bluntly, saying that's not going to happen in his view. The spending plans probably won't hold up when Reeves's cabinet colleagues start making demands. Right, and even though this budget aims to avoid austerity, there's still skepticism about whether it'll actually do enough to improve public services or boost living standards. The Resolution Foundation, another think tank, highlighted that while there will be more funding for services like schools, the NHS, and the justice system, families could still feel a financial pinch. Specifically, employers may face higher national insurance contributions, which could slow down wage growth for employees. So it's a trade-off, and one that might not entirely work out for families struggling with the cost of living. Interestingly, Downing Street has hinted that this budget isn't the full story when it comes to economic growth. Labour leaders are suggesting that as further policies get fleshed out like planning reform and updates to the skills system, the outlook may improve. Starmer's spokesperson mentioned this budget as a start and expressed hope that growth projections will look better as Labour rolls out its full agenda. No, 10 has also been quick to counter criticisms about the spending plans, pointing out that the government has increased public spending faster than the plans they inherited. They're framing the budget as a necessary course correction, saying Labour took on spending plans from the previous administration that didn't add up. To fix that, they've made difficult decisions to reallocate funds where needed. They argue that public funding is actually set to grow by an average of 2% a year in real terms, which they say is higher than the Conservative plans they took over. So, in summary, Reeves's budget is ambitious but risky. She's trying to walk a fine line between expanding public services and maintaining economic stability, but she's facing challenges from both financial markets and skeptical economists. Labour's focus on reversing austerity and supporting growth may resonate with voters, but the question is whether this budget will deliver those outcomes in time for the next election. Right, that's the landscape as it stands. Reeves is putting a lot of political capital into this budget, and it's going to be fascinating to see how things unfold over the coming months. Will Labour's plans stabilise the economy, or could these early warning signs signal a tougher road ahead?
Thanks for watching our video. Please hit the bell icon and subscribe the channel. Thank you.